Hello everyone, welcome to the 163rd episode of me learning how to trade in Forex. So in the last episode, we went through understanding costs. So when you trade, there are several potential costs you need to be aware of. Because if a demo account simulates a real trading environment, these costs are also replicated in the demo account, so you get the real world experience basically. Okay, so what are trading fees? Trading fees are the primary way in which brokers make money. So they apply when you buy or sell an asset and are paid to the broker as a commission for helping to facilitate the trade through their trading platform. So trading fees change substantially from product to product, so they'd be different if you're trading from Forex or options and shares and so on. And they also are different between different brokers. And then we've got types of trading fees and costs. So spreads, basically spread is the difference between the buy, so which is the offer, and the sell, which is the bid prices quoted for any given asset. So this is so you can calculate the spread by deducting the bid from the offer. When you're trading, you're hoping that the market value will move beyond the price of the spread so that your trade becomes profitable. If the price doesn't go further than cost of the spread, you risk closing at a loss even if the market moves in your favor. Right, so some of the trading accounts show you what the spread is. So for example over here, commission, these are charged when trading shares using a CFD account and are calculated as a percentage of the transaction value for most markets. So with minimum charges or a cents per share. Right, and then we've got overnight funding charges. So if you hold a short-term trade and you decide to keep it open overnight, you'll be charged a daily interest fee. So yeah, an interest adjustment will be made to your account to reflect that cost. And it's important to understand that overnight funding fees will be shown as separate charges on your accounts and not reflected in your running profit or loss. So you need to take these charges into account when calculating your actual profit. And it's also critical to know that overnight funding is calculated differently for the different asset classes. Gross exposure, so potential impact of their gross exposure on their profit or losses. So financial exposure is simply the amount of money you stand to lose when you trade or invest, also known as risk. So remember that when you're trading shares and stuff, investing in assets, your exposure is limited to the amount you pay for it. So for example, for share trading, if you invested £100 and the maximum loss you can lose, I guess, is £100 because that's all you can lose. However, with leverage trading, you do a margin, which is your deposit. So depositing a small amount to control a larger amount. So if you do lose that larger position, your losses could become more than your initial deposit because you're basically playing with the whole position instead of what you deposited. Your gross exposure is your total exposure to the market, including long and short positions and use of leverage. And then we went through the lesson summary. So, and then we went through, I think, these two lines of keeping track of your trading performance. So, keeping track of your trading performance is important for two major reasons. It ensures you know how much money you're making or losing, and helps you improve your trades over time. Right, okay. In this lesson, we'll look at how to track your performance, some key metrics, as well as ways to experiment with your demo trading accounts. So that's where we left off at. And now, we're going to carry on from where we left off at. So, how do I track my trading performance? Your demo trading account offers you a range of historical data on your trades, such as the transactions you've made, your account activity, and your profit and loss statement. So, your demo trading account keeps track of various historical data on your trades, such as the transactions you've made, your account activity and your profit loss statement. However, what no platform can track for you is what you were thinking when you made a trade, what your motivational goals were, and how you felt when you closed the trade, and how your profit or loss affected the subsequent trade decisions or strategy you pursued. However, no trading platform can record what you were thinking when you made a trade, what your motivational goals were, what your motivation or goals were, how you felt when you closed the trade, how you felt when you closed the trade, and how your profit or loss affected the subsequent trade decisions or strategy you pursued, and how your profit/loss affected the subsequent trade decisions or strategy you pursued. These are all psychological factors. The psychological factors involved, such as... So these are all psychological factors that can influence financial decisions. Personality, emotions and moods, biases and social pressures. Explore how these may be affecting your trading here. So, psychological factors such as your personality, emotions, moods, biases and social pressure can all can influence your trading decisions. One way that can get a grip on the aspects of trading that aren't reflected in your demo trading account history is to keep a trading journal. Yep, keep a trading journal. Why and how to keep a trading journal? A trading journal is a record of all your trading activity and can include as little or as much detail as you like. So, a trading journal is a record of all your trading activity. Is a record of all your trading activity and can include as little or as much detail as you like. The trick is to figure out what information is useful to you, so you might want to start out keeping detailed records and then scale back as you reflect on what information has been most helpful over time. So note down the important information. Your trading journal should be based on a trading plan, what you set out to achieve and how you plan to do so. Using your journal to capture how you execute your plan, however well or poorly, and results will enable you to learn from trades and improve your performance and strategy over time. So your trading journal should be based on the trading plan. On a trading plan. What you set out to achieve and how you plan to do so. Your trading plan should detail what you set out to achieve and how you plan to do so. Using a journal to capture how well you executed your plan, however well or poorly, and results will enable you to learn from trades and improve your performance and strategy over time. So using your journal to record your trade will help you to reflect and improve your performance and strategy over time. You can use a book, a spreadsheet, or even annotated screenshots of your trading charts and file them. Anything that works for you that you can commit to doing regularly. One of the keys to successful trading is discipline, and keeping a trading diary is a good way to practice this. Some of the things you might want to note include things to note in your trading diary. So, what you are trading, for example, the currency pair if you're trading Forex. What you're trading, i.e. the currency pair name if you're trading Forex. What your goal is, be as specific as possible. What your goal is. Be as specific as possible. What your plan is. For example, when you open your position, when you'll close it, and what parameters you'll watch to make that decision. So, i.e. when you open your position, when you close your position, and what parameters will you watch to make that decision. The size of the trade you plan to make. The size of the trade you plan to make. One lot. Your trading position, long or short. Your trading position, i.e. going long or short. The date and or time of the trade. The date and time of the trade. Your reason for making the trade, such as performing technical or fundamental analysis or responding to a market signal. Your reason for making the trade, i.e. using fundamental or technical analysis or responding to a market signal. Your conviction about a trade. This is how you feel about it going in. You might have higher conviction if the trade meets several of the factors you're looking for in your analysis, or you might have a medium or low conviction if you're trying out a new strategy. So this is how you feel about going in a trade. I.e. high conviction could show that the trade meets several of the factors you're looking for in your analysis. Medium or low conviction could mean you're trying out a new strategy. So this is like your confidence level when going into a trade. Whether you followed your plan or deviated from it. Whether you followed your plan or deviated from it. And how if you did change course. Whether you followed your plan or deviated from it, and how if you did. For example, maybe your plan was to make a decision based on a daily chart, but you second guessed yourself, opened the hourly chart and then changed your mind. Or maybe your cat jumped on your keyboard and accidentally closed your trade earlier than you planned. These kinds of situations won't be reflected in your trading history. It might be difficult to remember your reasoning or what happened later on, which is where the journal comes in handy, especially if your cat taught you something by taking a decision you would never have made yourself. What was happening in the market? What was happening in the market? Again, this can be difficult to remember later on, so keeping notes can help in similar future situations. So this is like a screenshot or something like that. The results of the trade and how you felt about it. The results of the trade and how you felt about it. Interestingly, when it comes to trading virtual money, people tend to think they won't experience the same feeling of loss, disappointment, or even anger when things go wrong as they would in a live trading environment. But our research shows that that's not the case. Losing on a trade feels awful, even if it's not real money. Figuring out how your emotions affect your trading is a major step in improving your performance, and so noting your emotional responses can be helpful in learning how to manage them. So figuring out how your emotions affect your trading is a major step. Figuring out how your emotions affect your trading is a major step in improving your performance. It's important for improving your trading performance. Noting this down can help you manage them. Can help you learn how to manage them. Start each journal entry before you open a trade and complete it once the trade is closed. So start the journal, each journal entry before you open a trade and finish it when the trade is closed. Key metrics. Beyond tracking your trading and learning spot patterns through a trading diary, there are several useful metrics you can keep an eye on to measure your performance. Performance metrics. Win rate. This is the number of trades you closed in profit from the total number of trades made. So the number of trades you've closed in profit from the total number of trades made. For example, if you placed 10 trades and were successful in 5 and lost 5, your win rate is 50%. It's important to understand, however, that even if you have a good win rate, you might still have a losing strategy. For example, if some of your losing trades were big ones that cancelled out the profit from your 5 successful trades. Remember that even if you have a good win rate, you might still have a losing strategy, as the losses could be more than your profit. profit loss ratio. Also known as P&L ratio for short. Your profit loss ratio is the average profit on your winning trades divided by the average loss on your losing trades over a specific period. So the average profit on your winning trades divided by the average loss on your losing trades over a specific period. It's a useful tool in assessing how your trading strategy is performing. You can assess how your trading strategy is performing. But should not be used in isolation. So by itself. You can have a favorable profit loss ratio and still have a losing strategy if your losses are significant, or if your fees on the trade outweigh your profit. So you can still have a favorable profit loss ratio and you can have a favorable profit loss ratio and still have a losing strategy if your losses are significant or if your fees on the trade outweigh your profits. A good goal is to aim for a profit and loss ratio of 2 to 1, which means you're making double the amount of profit on trades that you're losing. So a good goal is to aim for a profit loss ratio of 2 to 1. Total return. This is the actual rate of return of your trades over a period of time. If your return rate is less than 1, you're losing money. If your return rate is above 1, you're making money. If it's exactly 1, you're breaking even. Total return is essentially a combination of your win rate and your profit and loss ratio. You should aim for a return rate of greater than 1 to make money. How do you calculate this? Combination of your win trade and your profit and loss ratio. The actual return of your trades over a period of time. The actual return of your trades over a period of time. So if your return rate is less than 1, you're losing money. If your return rate is 1, you're breaking even. If your return rate is above 1, you're making money. You should aim for a return rate greater than 1 to make money. Did you know with the IG Trade Analytics tool available with a live account, the win rate, profit and loss ratio and return rate are calculated automatically and reflected on your trading dashboard to help you measure your performance? Okay, so starting to experiment. It can be intimidating to start trading, even in a demo environment. Here are a few potential tips to try. Keep up with the news. Trading the news is harder than many think, but keeping tabs on it and the analytics feeds that many demo trading tools have can be a helpful place to start. Getting in grips with how news affects markets is an essential part of being a successful trader. Trading in a demo account gives you the freedom to experiment with new strategies, so if you ever want to trade the news, this is a place to try it. So Tips. So potential tips to try in a demo account. Keeping up with the news. Keep tabs on the news. Keep tabs on the news. Learn how the news affects the markets. Learn how the news affects the markets. Make use of market/trading signals. Make use of market/trading signals. Trading signals are triggers for action. They signal when to buy or sell a security or other assets and are generated by analysis. They can be made by people who use technical indicators to develop them or by algorithms that track market action, sometimes in combination with other factors. The goal is to offer traders the indication whether to buy or sell a security or other assets without bringing emotions into the equation. Some demo trading platforms offer market signal streams. If you're unsure how to start, using signals to guide your trading decisions can be a good way to get some practice and understanding of the markets. These fees usually indicate whether to buy or sell, as well as provide information such as a good opening point, what your limits should be, and what the latest price is, and so on. Some platforms enable you to copy this information to your order on the deal ticket. Trading signals are triggers for action. So they can signal when to buy or sell an asset. And is generated by analysis. So this analysis can be made by people or by algorithms. That track market action, sometimes in combination with other factors. The goal is to offer traders an indication whether to buy or sell a security or an asset, without bringing emotions into the equation. Some demo trading platforms offer market signal streams. If you're unsure how to start, using signals to guide your trading decisions can be a good way to get some practice and understanding of the markets. These fees usually indicate whether to buy or sell, as well as provide information such as good opening points, what your limits should be, what the latest price is, and so on. Some platforms enable you to copy this information to your order on the deal ticket. Using trading signals to start. Using trading signals to guide your trading decisions can be a good way to start. Start with markets you know, then expand. Start with markets you know, then expand. If you're unsure of where to start, pick a market you're most comfortable with and get stuck in. Pick a market you're most comfortable with when starting trading. It might be for Forex or a popular index. Once you've developed a bit of experience and confidence, you can explore new markets and products. Only explore new markets and products once you gained enough experience. Don't be scared to lose. Losing is an important part of trading and teaches you as much as your successful trades, if not more than. The demo account is a much better place to do this than the live trading environment. Although losing still hurts, it's preferable to do so with virtual funds, so give yourself room and grace to try new things and space to not always get it right. The benefit of a demo account is that you can top up your virtual funds at no cost to you if you need to. You can top up your virtual funds at no cost to you if you need. Oh, so you can refill up your account and just keep using it. Oh, that's nice. Benefit of them is that you can top up your virtual funds at no cost to you if you need to. So losing is an important part of trading and teaches you as much as your successful trades. Give yourself room to try new things and space to not always get it right. Remember that demo accounts can be topped up with virtual funds at no cost to you if you need to. Did you? Oh, yeah. So I thought that with a demo account, once you've lost everything in it, you're gonna have to create another account and then make another demo account. I didn't realize you could top up the existing account for free, so that's good to know. If you're looking for some expert input or looking to ask specific questions, IG Academy runs regular trading webinars. Find out more and sign up here. Cool. Lesson summary. Tracking your trading performance is an important step in improving. You can make use of the historical data in your demo trading account as a starting point. Keeping a trading diary can help you track information that won't be captured in your historical trading activity, but can still help you to improve your trading performance and strategies over time, including psychological factors at play. Win rate, profit loss ratio, and the total return are three useful trading metrics you can track to help measure your trading performance. If you're uncertain how to start trading, consider using some of the tools available in your demo trading platform, such as following news related to the markets you're looking to trade in, using market signals, and allowing yourself the space to try new trading strategies and to fail. Cool. Demo trading tips from our analysts. So demo trading tips from our analysts. One of the best ways to learn about a subject is to get input from someone who knows more about it than you do. When it comes to learning how to trade more effectively, whether in your demo account or on a live platform, market analysts can be a great source of tips and advice. Market analysts can be a great source of tips and advice when learning about how to trade more effectively. They're used to providing timely market commentary and in-depth reporting across global financial markets. In this session, we asked some of our analysts to share their tips for demo and live trading. Demo accounts and trading strategy. Treat your virtual money as real. Tips for demo and live trading. Treat your virtual money as real. Treat your virtual money as real. When we invest in demo accounts, we should think of it as real money and put in place the same capital management as we would if our capital was at stake. Advises Sergio Avila Luengo, IG market analyst in Spain. This way we get the most out of the demo account and it prepares us for live trading properly. So Put in place the same capital management as we would if our real capital was at stake. For a demo account as we would if our real capital was at stake. Try to start the same base amount for a certain strategy and only adjust the amount of gain when testing a new trading strategy. Try to start the same base amount for a suggests Monte Safidin, market analyst for IG You can do this by selecting manage funds once logged into the IG demo platform and setting it back to say $10,000. This will help you to avoid shifting to larger sizes for an easy way out instead of tinkering with size and risk management to develop an optimal strategy. Try to start with the same base amount for a certain strategy. Tinkering with size and risk management to develop an optimal strategy. Yep. Use a demo account no matter where you are in your trading journey. Use a demo account no matter your expertise. Demo account can serve as a training wheels for new traders or a systematic strategy testing system for the more advanced trader, says Sean Morrison, IG market analyst in South Africa. The tool provides a necessary stepping stone in helping beginners understand the dynamics of varying market conditions and asset classes, ironing out possible mistakes in a risk-free demo environment. Experienced traders are able to use demo accounts to search for a statistical edge in a new trading strategy, which if found can help with confidence and to execute trades in the live environment. The demo environment helps beginners to understand the dynamics of varying market conditions and asset classes, allowing them to learn from their mistakes in a risk-free environment. Experienced traders can use the demo account for developing new strategies. Monte agrees, adding a demo account is a great place to try new strategies or experiment with tweaks on strategies you're already running in a live environment. For example, if your strategy involves price action with respect to key moving averages and you're looking to add another indicator like the relative strength index, you can add the indicator on a chart in a demo account and forward test its results. Did you know relative strength index is a tool used in technical analysis to assess the momentum of assets to gauge whether they are in overbought or oversold territory? The index runs on a scale of 0 to 100 and is used by analysts and traders to decide when to buy or sell. Traditionally, the relative strength index is considered overbought when it's above 70, and oversold when it's below 30. Learn more about the relative strength index and how to calculate it here. Use your demo account to practice consistency. Use your demo account to practice consistency. Does it feel like the moment you don't place the trade is when it works in line with your strategy? Does it feel like the moment you don't place the trade is when it works in line with your strategy? Consider using the demo account to practice consistency in action on your part. So when you're trading live, you won't miss the opportunity when it represents itself, regardless of whether it moves in favor or against, advises Monte. Christia van Herden, education lead at IG, says her role gives her access to a huge amount of data, a crystal ball into client trading behavior. and this data shows being equipped with the right information isn't enough to ensure trading success. Our emotions get in our way when we trade. I recognize this in my own trading behavior, she says. That means we need to find motivators outside of profit, and we need to set up trading environments to help us express the emotions that get stirred up in the markets without putting our trading at risk. Her advice is keep a trading journal and diligently make record of the emotions you experience when trading so you can become aware of your patterns and learn to manage them. She also suggests making any riskier trades you want to try in a demo account, not a live account, which can be a way of getting them out of your system, so you can be disciplined in your live account trades. Keep a trading journal and make records of the emotions you experienced when trading. So you can become aware of your patterns and learn to manage them. Make any riskier trades you want in the demo account. Demo accounts are a place to learn good trading habits. As humans, we have a tendency to risk it all to avoid a loss while closing positions in profit swiftly on fear the market's oscillations could result in it going against, says Monte. To conquer this requires practicing with demo accounts. Monte notes that practicing when to hold or let go of trades in a demo account develops good habits that can be applied in live trading. This will make it easier when trading live to get more out of a trade when it goes in favor, and crucially, minimizing losses on those days where it trends against, he says. On the demo account, place a trade and practice putting in place time limits that are longer for when the market goes in your favor, set at least 30 minutes, and very short when it goes against 5 minutes. You can also set stop and limit orders to automatically help you protect your profits and guard against losses. Right, okay. Tips of getting started with live trading. Be realistic. Chris Beauchamp, Chief Market Analyst at IG, says whether you're just starting out or you're more experienced, it's vital to only put in what you can afford to lose when it comes to trading. Be realistic. Only put in what you can afford to lose when trading. Monte says another important habit to cultivate is not to look for the one when you're trading. It's wrong to treat every trade as the one that will generate large returns, he says. Trading success usually involves a sum of trades that on average have gone more in your favor than those that have gone against you. Use a demo account to open and close trades at the start of your trading day to remind yourself it's just another trade. You can then switch to a live account and start placing live trades, knowing that there won't be a sole trade that guarantee financial freedom, but rather several over a long period of time. So, don't try to look for the one trade which will give you financial freedom. Trading success usually involves a sum of trades that on average have gone more in your favor than have those that have gone against you. Have gone more in your favor than against. Don't try to trade or invest in everything. Don't try to trade or invest in everything. Too often people flit from one market to another looking for the big move, or they change strategies regularly, says Chris. It's important to remember not every day has to have a share deal in it, and it's okay to not know which way a market is going. Sticking with one or two markets and following a consistent investment strategy for a while instead of chopping and changing is usually a sensible approach. So one or two markets and follow a consistent investment strategy for a while instead of changing every so often is a sensible approach. He adds that many first-time traders tend to be overly ambitious and don't exercise enough caution. It's important to bear in mind how quickly markets can move, he says. It's possible to make big gains, but the crucial risk here is that these gains come with potential for big losses. It's vital to ensure you don't over-leverage, take on too much potential risk when compared to your investment capital. Don't over-leverage. So trade what you can afford to lose. Lesson summary. Market analysts can be a valuable resource when it comes to trading advice. IG analysts suggest treating your demo account trades as realistically as possible to build useful experience you can apply in a live trading environment. One of the important things to practice in demo account is consistency and discipline, particularly when it comes to learning when to hold a position and when to close it, as well as how to stick to your trading strategy, no matter how you feel in the moment. Being selective and cautious is good strategy when starting out with live trading. Markets can move quickly and new traders need to ensure they understand that with the potential for financial gain comes the potential for financial loss. Being selective and cautious is a good strategy when starting out with live trading. Markets can move quickly and new traders need to ensure they understand that with the potential financial gain comes the potential financial loss. Yep. I'm going to leave this episode here then. So in the next video we're going to go through common questions relating to demo trading. So thank you all for watching. Bye bye.